Every year, the union budget drops, and it can feel like this huge, complicated storm of numbers and jargon, right? So what does it actually mean for your wallet, your plans, and your future? Well, in this explainer, we're going to cut through all that noise and break down the 2026 budget into what really, truly matters to you. So let's get right into it.
So, what's the big theme this year? Well, the government's boiled it down to just two words: stability and simplification. This tells you right away that this isn't a budget about massive, radical changes. Nope. The focus is all about making the system we already have work better, making it easier for you to navigate, and honestly, just a lot less stressful for everybody.
All right, here's a quick look at what we're going to cover. We'll start with the big idea behind the budget, then we'll dive deep into the tax changes, the part I know you're waiting for. We'll decode the new versus old tax regimes, check out some other key highlights beyond taxes, see what's getting cheaper or more expensive, and then wrap it all up with your personal takeaway.
So let's kick things off with the big idea. What's the philosophy behind this budget? Well, it's all about modernizing things through simplicity. The main goal here is to use technology to slash paperwork, streamline all those clunky processes, and just make doing anything financial, whether it's paying your taxes or starting a business, a much more user-friendly experience. Think less red tape and a whole lot more efficiency.
Okay, let's get to the part I know you're really here for, your taxes. The government has made some pretty significant moves to simplify the entire system. And you know what? These changes are specifically designed to lower your stress levels when tax season rolls around.
And look, this isn't just some minor tweak. This is a huge deal. They're literally throwing out a complicated 60-year-old law and replacing it with something brand new from the ground up. The whole point is clarity, to make the tax code something that an average person can actually understand without having to hire a whole team of experts.
And if you want proof of how serious they are about this simplification thing, just look at this number: 50%. That's the target for cutting down all that confusing fine print. Imagine taking one of those ridiculously long contracts and just chopping the confusing legal jargon in half. That's exactly the kind of ambition we're talking about for the entire tax code.
Now this is a practical change that's going to make a lot of people breathe a huge sigh of relief. Ever made a mistake on your tax return? Of course we all have. Well, now you've got 3 extra months to go back and fix it. The deadline to file a revised return is being pushed all the way to March 31st. That's some much-needed breathing room right there.
Okay, listen up. If you're planning a trip overseas, or maybe sending money abroad for your kids' education, this is big. That upfront tax you have to pay, it's called Tax Collected at Source, or TCS. It's been slashed from as high as 20% all the way down to a simple, flat 2%. This is great because it means less of your own money is locked up right from the start.
All right, we're now getting to the absolute core of it, the heart of the matter for your personal finances. Choosing your tax regime isn't just a box you tick anymore. Honestly, it might be one of the most important financial decisions you make this entire year.
So it all boils down to this one massive question: new versus old. Which one is right for you? Now, the new system is the default choice, and the government's hoping it will make life simpler for millions of people. The idea is you can file your taxes without needing tons of professional help. So let's break it down and see if that simple path is actually the best one for you.
Okay, let's take a look at this table. It might seem a little intimidating, but it's actually pretty simple. Think of the new regime on the left like a gentle staircase. It has more steps, or slabs, so your tax rate goes up nice and gradually. But the old regime on the right, that's more like a steep climb. The tax rates jump up much, much faster.
Okay, hold on. Before I reveal the magic number for paying zero tax, we need to quickly talk about something called the Section 87A rebate. What is it? Think of it like a tax discount, a special rule that can completely wipe out your tax bill and bring it down to zero, if your income is below a certain limit.
And here it is. This is the number you've been waiting for: 12,75,000 rupees. Under the new tax regime, if you're a salaried person earning up to this amount, you pay zero tax. Nothing. How is that possible? Well, it's that rebate we just talked about, plus a standard deduction of 75,000 rupees. It is, frankly, a game changer.
So at the end of the day, it comes down to a really clear trade-off. The new regime is all about simplicity and lower tax rates. You don't have to track investments or save receipts. The old regime is for people who have big investments, like a home loan or insurance, and want to claim deductions. The rule of thumb: the old way really only makes sense if your total deductions are more than about 4.5 lakh rupees a year.
Phew! Okay, That was a lot on tax, I know. But the budget is so much more than just income tax. So let's do a quick fire round on some of the other major highlights that you should know about.
First up, for farmers and rural India, there's a big push into tech. We're talking about a new AI platform called Bharat Vistar that gives real-time crop advice. There's also a focus on high-value crops to boost income. And this is fantastic. A new initiative called She-Marts will set up village markets to help rural women entrepreneurs sell their products directly.
Now, what about health? This is some really good news. For patients, there's some major relief coming. They're getting rid of customs duty on 17 essential cancer drugs, which should bring down treatment costs. And looking ahead, the government plans to build 5 new world-class medical hubs around the country to improve access to top-quality healthcare.
And for the youth, the big focus here is all about bridging that tricky gap between getting your degree and landing a great job. A new committee is going to work on making sure what you learn in college actually matches the skills companies are looking for. And to help more women pursue higher education, new girls' hostels are going to be built in every single district.
Now let's zoom out and look at the big picture for the whole country. The government is going all in on infrastructure. We're talking 7 new high-speed rail corridors and a record 12.2 lakh crore rupees being poured into building the roads, bridges, and ports of the future. The idea is to create jobs today and power our economy for years to come.
All right, let's boil it all down to the question everyone asks. What's getting cheaper and what's getting more expensive? This is the bottom line for your shopping list.
So what's getting cheaper? Well, as we mentioned, those life-saving cancer medicines are on the list. That's huge. Also things like sports equipment and key parts for electric cars, like lithium-ion batteries. Now, what's getting costlier? If you're into stock market trading, especially with futures and options, your transaction costs are going up. And no surprise here, certain luxury imported items are also going to get a bit pricier.
Okay, we have covered a ton of ground. So let's pull it all together. What does all of this actually mean for you? What's your big takeaway from all this?
Let's break it down into 4 simple points. First, and this is the big one, tax is simpler. By default, for most people, that means less paperwork. Second, for a lot of you, this means more money in your pocket every month. Third, there's some really targeted help for specific groups, like we saw with cancer patients and farmers. And finally, it all comes down to a clear choice that you have to make: simplicity or deductions.
And that really brings us right back to you. We've gone through the numbers. We've laid out the pros and the cons. The whole system is gently nudging you towards a simpler, more straightforward path with more cash in hand. So the real question is it time for you to make that switch?